LBMA gold price forecast. Could gold end 2026 above $4,500 per ounce? Gold could end 2026 trading on either side of the $4,500 per ounce level, according to the latest survey from the London Bullion Market Association, or LBMA. Despite significant volatility and recent weakness in the gold market, analysts remain broadly optimistic about the metal's outlook for the remainder of the year. The latest survey shows that while there is considerable disagreement over where gold could finish 2026, the overall expectations remain elevated. The LBMA surveyed 16 professional precious metals analysts in July. At that time, gold was trading near its lowest levels of the year and was frequently falling below $4,000 an ounce. But even with those weaker prices, analysts were still forecasting a significant recovery at the time of the survey. The average year-end prediction was more than 12% above gold's market levels at the time of the survey. The forecasts, however, are extremely wide. The most bullish year-end prediction sees gold reaching $5,100 per ounce, while the lowest forecast is $3,879. That figure is slightly below the low recorded in early July. The LBMA says gold averaged approximately $4,596 an ounce during the first 7 months of 2026. Based on the latest analyst survey, the projected full-year average now stands at around $4,604 per ounce. For the second half of the year, analysts expect gold's potential highs to range from approximately $4,822 to as much as $5,800 an ounce. On the downside, some forecasts allow for prices to fall toward $3,450. So what will determine where gold ultimately finishes the year? According to the LBMA, the major drivers haven't changed significantly. Geopolitical tensions remain one of the biggest factors, particularly developments in the Middle East. U.S. inflation is another major consideration. Investors are closely watching whether inflation continues to ease and how that could influence Federal Reserve monetary policy. The direction of the Federal Reserve is especially important for gold because interest rates and real yields can have a major impact on the attractiveness of non-yielding assets, such as gold. Analysts are also paying close attention to central bank demand. Central banks around the world have continued diversifying their reserves, including increasing their allocations to gold. If that trend continues, it could provide an important source of underlying demand, even during periods of market volatility. Geopolitical developments have also become more prominent in the latest forecasts. Of the 16 analysts surveyed by the LBMA, 5 specifically identified Iran as a primary concern. Other analysts focused more heavily on the Federal Reserve and how policymakers could respond to inflation and changing economic conditions. This represents a shift from the expectations seen earlier in the year. Back in January, the LBMA's annual Precious Metals Analyst Survey projected that gold would average nearly $4,742 an ounce during 2026. At that time, analysts were expecting lower U.S. real interest rates, continued Federal Reserve easing, and persistent central bank diversification away from the U.S. dollar to support gold prices. Geopolitical uncertainty was also expected to strengthen gold's role as a traditional safe haven asset. But the market has experienced a much more complicated path than those early forecasts suggested. And perhaps the most important takeaway from the latest survey is the enormous difference between the bullish and bearish scenarios. The forecasting range for gold this year is roughly $3,700 per ounce, stretching from a low forecast of $3,450 to a remarkable high of $7,150 per ounce. That enormous range shows just how uncertain the gold market has become. Julia Du, a commodity strategist at ICBC Standard Bank, has the most bullish outlook. She expects gold could reach as high as $7,150 per ounce this year, with an average annual price target of around $6,050. Her bullish case is based on several factors. She expects heightened geopolitical risks to maintain strong safe haven demand. She also believes central banks will continue adding gold to their reserves, while institutional investors could increase their allocations to the precious metal. Continued Federal Reserve rate cuts would provide another potential tailwind. Do also expects retail demand to remain strong, particularly in Latin America. But not everyone shares that level of optimism. Robin Barr, founder of Robin Barr Metals Consulting, has one of the most conservative forecasts. He expects gold to average around $4,000 an ounce this year, with prices potentially reaching $5,000 at the peak. However, even Barr's relatively cautious outlook recognizes that gold continues to benefit from several powerful structural factors: economic uncertainty, political risks, concerns surrounding Federal Reserve independence, inflationary pressures, geopolitical tensions, and continued central bank purchases could all provide support for the metal. Another important forecast comes from Alexander Zumpfi, a precious metals trader at Heraeus. Zumpfi expects gold to remain well supported by strong investment demand, although he also warns that periods of profit-taking and market consolidation are likely. His forecast places potential support around $3,450, while the upside target reaches approximately $5,200 per ounce. So where does all of this leave gold heading into the final months of 2026? The latest LBMA survey suggests that the $4,500 level could become an important reference point. Some analysts expect gold to finish below it, while others see prices moving significantly higher. What is clear is that the market remains highly sensitive to a handful of major variables: Federal Reserve policy, U.S. inflation, geopolitical tensions, and central bank gold purchases. If interest rates continue falling, geopolitical risks intensify, and central banks maintain strong demand, gold could push toward the upper end of the forecast range. But if inflation remains persistent, monetary easing slows, or geopolitical tensions ease, gold could face renewed selling pressure and potentially fall back toward the lower forecasts. For investors, the wide range of predictions is a reminder that gold's long-term story may remain bullish, but the journey could be extremely volatile. The current consensus is pointing toward gold finishing 2026 somewhere around the $4,500 per ounce region. Whether it ends the year above or below that level, however, could ultimately depend on what happens with the Federal Reserve, inflation, central bank demand, and geopolitical risk over the next few months. And with forecasts stretching all the way from $3,450 to $7,150, one thing is certain: the gold market is entering the final part of 2026 with uncertainty and potentially significant volatility still firmly in focus.